station of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Oh, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our Believe cards. Let's see what we have here. This is by Marlo Jayavanda. Be strong. Go with your heart and believe in miracles because anything can happen. Market-wise, let's take a look at it out here. We had the Dow Industrials down 119, NASDAQ off 18, S&P's off 10, gold contract flat at $1,318 an ounce. Silver, $20.91 an ounce. Platinum up $11, trading at $1,468 an ounce. Copper, $3.14 a pound. Light sweet crude off 17 cents, trading at $1.06 a barrel. Bonds, you had the 10-year up 11 ticks at 124.20. 30-year up 25 ticks at 136.05. Those bond markets, folks, they want not only higher price, they're little rocket ships. King dollar up 47 cents, trading at 47 ticks rather at 80.38. The euro is flat at 136, and the yen is flat at 101.93. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Oh, this is going to get interesting here, folks. So, cash S&P. What do? We get to a price point today of 1968.17. We do volume of 632 million, and you got to remember that on option expiration we did that 1.7 billion. So you had to get over that number in order to get a failure number one. Bottom line, we get over it. We close under it. We close at 1950.68. Now, what that also did is that also got under the high swing of the 9th of June. Right now, we are basically going to go test the 1925. Now, that's another 25 points down. It's going to be interesting to see how this shakes out. The SPY, the SPY. We take a look at the SPY. What you have with the SPY is this. SPY got to a high today of 196.50, closed at 194.70, tested that high, didn't have the juice, 93 million. SPY is going to make its way down to 192.70, and we'll see whether we get an expansion of volume. Well, we have a shot here, folks, it being Tuesday, that we get an expansion of volume Wednesday and Thursday. Dow Industrials, we take a look at the Dow. You got to remember, in the summer trading, Tuesday, Wednesday, Thursday, that's about the only times you get a shot of having an expansion of volume. Dow Industrials tries to get it to the high. The first high, not the first high in the Dow, as the other indices have been going to continual high, but the 9th of June, the high was 16,970. The 20th, we had 16,978. We get into both of them today, couldn't handle it, comes back down. Dow now will go after 709. And right now we're at 818. NASDAQ Composite. What do we have inside the composite? Inside the composite got to a price point today of 43.99. That brought it over the swing point of March 7th, closed underneath it, had lighter volume. That's a failure straight across. We go look at the NDX 100, the 3 Qs. What you have with the 3 Qs? There she is. 3 Qs today got to a high of 93.57, which was over all the highs going all the way back to June 9th, closed underneath them, had lighter volume. That sets up, first off, we're going to go after the 5th of June, the bottom of that level, which is 91.29. We see we're getting an expansion of volume. We're not going to need a big expansion of volume. You got to remember, we hit highs with nothing. And in fact, in the Qs, once you get back inside 91.36, that puts game into 83. So it's a big number because we broke higher. When we broke higher, we had lighter volume. And a failure like that, when you come back inside the range, you go to the bottom of that range. Bond market. Well, here, let's do the gold market first. Have a gold out here is this. She's trading at 13.19. We did 112,000 contracts out here. Last Thursday, she had wide price spread, accelerated volume. Bottom line, gold is making her way up to this 13.92. Silver, same setup on silver. So gold is making its way to the March highs. Silver is making its way to its February highs. Silver right now is trading out SIN4. Silver is trading out at 20.91, and that February high is 22.22. Bonds. We go with the 10-year bond first. We take a look at the 10-year bond. What you have with the 10-year bond is this. She did 1 million contracts out here today. We are at 124.19, and your swing point out here is 126. She wants to go after that. I suspect she's going to do about a 128, the 10-year. The yield on the 10-year right now is 2.578. We go to the 30-year. We take a look at the 30-year. 30-year did 312,000 contracts today. She is at 136.05. She's going after the 138.10. The 30-year is on its way to 142, and 142 is ice, meaning that that is a normal bounce in a market that had been going down. What the difference is in the bond market is that you continue to go higher with volume, you pull back with lighter volume. They're doing multiple ABC structures on the way up. Bonds want lower yield, higher price. In fact, what is pretty wild is that the Federal Reserve Bank of New York's President William Dudley said investor expectations that the Fed may raise main interest rates in mid-2015 may prove incorrect while appearing now to be reasonable. The market expectations that the Federal Reserve will start to raise interest rates around the middle of 2015, Dudley said in reply to an audience after a speech in San Juan, Puerto Rico. That sounds to me like a reasonable forecast, but forecasts often go astray. I wouldn't put much weight on this particular set of forecasts. Pretty intense, no doubt. We go take a look at King Dollar. What do we have for King Dollar out here? King Dollar rejected lower price once again, had lighter volume, sideways move out here today. We did 15,000 contracts. We're at 80.38. 81.50 is game on King Dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, where I'm going, and we're going to bring you, folks, is guess where? We're going to Dubai. Now, why are we going to Dubai? You know what's really wild is that, we go through a lot of different indices, but last night I'm going through the indices and I'm looking and I'm watching and I'm saying, what is going on in Dubai, okay? Because we know, Middle East, if you get my newsletter, the Middle East to me is like, okay, that's where this thing's going to basically come out of nowhere. Bottom line is that money is coming out of Dubai so quick, it's insane. Last night, they were down. If you're watching Target TV, I'm going to put this up. They were down 6.6% last night. Now, that is a monster move, number one. Number two, what you're talking is that you're talking from 30 trading days, they're down 20%. This thing's moving out, folks. And if I've learned anything over the course of the last 20, 30 years, in the markets, what happens is this, whether it's an Asian contagion, whether, when you have political problems or currency problems are normally always the biggest problems, okay? So if a currency starts somewhere in the world, it basically hits equity markets, it hits currency markets. There's dislocations, that's my point. This dislocation over in Dubai is a big one. And I suspect that intraday today, that more than likely was what was starting to basically get a sell-off going. Because what you had at the beginning of the day, there wasn't a sniff of it anywhere. About noontime, I saw the first press release coming across saying, hey, Dubai's down 20% in 6 weeks. I says, oh, here we go. Okay? And there was only one. There was only one small press release. You're going to hear more about it. Why? Because what you'll end up seeing, I suspect tonight, you'll see Asia start getting hit. You'll see Dubai get hit again. Okay, I'll bring that Dubai chart up again so you can see where it wants to go, and it's going down. And in the aspect also, folks, is that Dubai had gone higher as our markets have gone higher. In Dubai's case, they've gone higher from 2005 until just now, and they went down 20% in 6 weeks. We're going to be right back. Stay right there.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone call. calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish off 119, NASDAQ off 18, S&P's off 9.5. And as we do each and every Tuesday at 20 past the first hour, let's go to our man, Mr. Andy Hecht. Andy, folks, has an outstanding program every Tuesday, Thursday, right here at TFNN, 3 to 4 Eastern Standard Time. Also has a great newsletter. You can test drive that newsletter absolutely free right now. The way you do it, right under breaking news, you're going to see Andy Hecht's newsletter trial for free. You can test drive that. 1 full month, folks, absolutely free. Andy Hecht, what's going on? Andy. Okay, we will get him back. Market-wise, folks, if we go over to the, let's go to Will in Macon, Georgia. Hey, Will, what's going on?
Hey, Tom. Thanks for taking my call.
Sure. Thanks for calling, man. Thanks for holding.
Hey, I've been getting killed in this SRTY lately because the market's just been going in the wrong direction. But do I have something to look forward to now in the next few months, hopefully now?
Oh, let's take a look. This vehicle that you're looking at, you shouldn't be holding. I mean, it's a daily investment vehicle, which they tell you, but let's go through it. Yeah. It's SRTY. This is the ProShare Ultra Short Russell 2000, the 3-time inverse of the Russell 2000, folks. The low is today, 35. The high is 88. And these are good vehicles, folks, but they are not buy and hold vehicles. You got no doubt here. Well, let me do this first. I'm going to go right over to the IWM first, okay? We'll do the IWM because that's the inverse correlation. Nice setup. IWM today gets to 118.91. It does 37 million shares. It's going into 112 million shares and fails. So IWM, guess what? We're at 116. That wants to run down to 107. Okay, so now let's go back to your equity, SRTY. And in this case, you got the 3-time inverse correlation. We are at the 3750 area, and, you know, she's going to run to 46, man. So, yeah, you got action.
What about over the longer term?
I'm here.
Go ahead. I'm sorry. Go ahead, Will.
Term though, you think is there a possibility for getting some action into that 60 to 70 range? You think or not?
Okay. What I'd love you to do is this, please. You come over to our website, right?
Yep.
And what you're going to see right on the front page. Let me pull this up so you can see this thing. Okay. Right in the front page, it says ETFs. As it come across, first it says home, about, radio, TV, newsletters. It says ETFs.
Okay.
Hit the overview of ETFs, right?
Uh-huh.
And what you're going to see there, it says Understanding Leveraged ETFs.
Uh-huh.
Please read this, okay? And there's 5 different ones. And the next one's Understand the Impact of Changing Market Exposure on Leveraged ETFs. And so to answer your question,
yep.
Yeah, it can go to 60, but do not hold this thing. Because the way that these work is this, is that they compound on the way up and get defensive on the way down, okay? So for the next week, I suspect that, yeah, you're going to get real action. In fact, what ends up happening, folks, is that if you get action on a trend basis, and that trend basis is continual, meaning 4 or 5 days in a row, these will move very quick because you are going to compound a number of $37.53. Then tomorrow, let's say it goes up another $1.50, you'll compound $39. And what happens is that when you get to higher price, folks, you got to remember something, how compounding goes. It goes exponential. Okay? So bottom line, please don't hang in it forever. Okay?
Just play it with the trend.
You play it with the trend. I'm just trying to explain. If you go and read how these things work, they're great vehicles, but if you understand the compounding aspect and the defensive aspect, you're going to trade these and be a lot more successful because then you're going to be into a money management deal versus just buy and hold. Because what happens, the downside of these goes like this, folks, is that let's picture we go up 2 days, right? And then you go sideways for another week. they're going to go down. No matter what, you can be at a higher price and they're going to go down. That's a bull and a bear. You can go up, let's say the market goes down again and we go up, and then you go sideways to chop back and forth for another week. Guess what? It's going down. It mathematically has to go down if you go back and forth 1 point every single day.
Okay.
Okay? Cooking, brother.
Thank you so much, Tom.
Have a great one, man. Have a safe one. Now let's go over to our man, Mr. Andy Heck. What's going on, brother?
Sorry about that, my man. I'm usually on at 5:20 on Tuesdays. That's why it was confusing.
I guess we better tell our producers that.
Okay. Usually 4:20 Thursdays, 5:20 Tuesdays. I was eating my lunch.
That's a beautiful thing.
Yeah. Eating my pasta. All right, so.
Pasta. You better stop eating those grains.
Oh, it's all right. I want to put some weight on. I lost weight with my teeth. Now I got to bulk up.
I got to bulk up. I got
to bulk up. So listen, my man.
Yeah.
I think I see something interesting out here. I want to run it by you.
Okay.
Iraq oil.
Yeah.
You know, there's a bid under this thing, and we're gonna get little spikes based on the news.
Sure.
But the XLE, I don't like, because I think that if we get
this is fun today. Oh yeah, I got smoked.
If we get a really good move in crude, I could see the XLE going down. You know why? Because some of these companies have money invested in Iraq.
Oh, no, it got smoked today. Come off the high with volume. Yeah.
Doesn't look good.
The XLE is at 99 going to 92. Yeah, this is nice.
Does not look good to me.
That means the DUG had that big action out here today. Oh, it did.
So don't just buy the XLE because you like crude oil. You got to really evaluate it. The listeners have to think about that. It's just, this is not I like crude, I'm buying the XLE. You like crude, buy crude.
The oil companies got killed, folks. Exxon was down $1.65, Chevron 121, Schlumberger 192, Oxy 374. Oh yeah.
This garbage going on in Iraq is not good for the oil companies.
Listen, this is serious business. Volume off the high and a correction means buku correction.
Yep, Boku. The low on the year is 76. There's a lot of room, man.
Yeah, there is.
There's a lot of room on this XLE, and the whole market looks better. And this contagion from Dubai, hey, watch out. I heard you mention that while I was shoving pasta in my face. Anyway, a couple of other things. Copper. Copper had a very nice move last week.
Yeah.
And, I think copper had a very nice move from about 304 up to 314, 315. I think now we start scale-up selling. I think this thing is in a range. You can trade the range in copper.
Yeah, I was doing the gold report today, and inside the gold report, folks, I have a couple stocks that are, I have SCCO, which is all copper, too. And it's not acting correctly, man. It's like, okay, you had a nice spike up, and look, it gave it up today, too. So, like SCCO, which is Southern Copper, yesterday you had 1.5 million. You're going against 4.2. It's like you're at 29. It's like, okay, this is going to test the bottom again at 26. So,
I think, it's a range trade. It's a range trade. So the copper stocks are a range trade. Now, Danny in Atlanta said Andy's long wheat. And yes, I am long wheat. And wheat looks terrible. Terrible. But let me talk a little bit about grains here. We have the corn and the wheat have gotten absolutely hammered because things are looking good in terms of the crop this year. Maybe we should hold this for after the break?
We will. And hey, listen,
okay.
This is going to get interesting because did you hear that I guess what's going on in this B&I Railroad, Buffett's Railroad, right?
Yeah.
They're having a problem regulation-wise because you stay right there. We're going to be coming right back. We're going to be talking about
Buffett.
We're going to be talking about how they pick up the wheat, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Heck, and right now we are talking wheat. Now Andy is also...
go ahead.
Andy is also coming out with a new book. And inside that book, it's the... What is the name of the book again? What's the name?
Luster,
yeah.
I'm still working on it. It's a long project, but you mentioned the magic word, buffet.
This is why I'm bringing it up, because if you don't know this yet, check this out. This is pretty intense, man. I meant to call you yesterday on this, okay? So inside that book, folks, okay, good old Warren Buffett is going to be somewhere in there, okay?
Yeah.
So check this out, man. Okay, we're just talking wheat, right? So Warren Buffett, folks, Berkshire Hathaway, they bought BNI, I think it was, right? Okay, so The railroad that they own is BNSF. Let me pull this up so everyone can see it. BRK, because this is a trip when I saw this come across the tape. You talk about a trade they could pull off here. Okay, so Warren Buffett's BNSF Railroad and Canadian Pacific Railroad have been given until June 27th to report plans to clear a backlog of grain shipments that some farmers have been fuming over rotten wheat and late deliveries. The U.S. Surface this came out yesterday, folks. U.S. Transportation Board ordered the railroads to outline by then how they will deal with service disruptions, including a timeline for doing so, and subsequently provide weekly updates about their progress. The board remains very concerned about the limited time period until the next harvest, the large quantities of grain yet to be moved, and the railroad's path toward meeting their respective commitments. Bottom line, when you read all of this, they haven't made their commitments, and you have grains that are rotten. Okay? Now,
he's moving oil. It pays better.
Well, who knows, okay? They're blaming it. No, I'm with you. They're blaming it on bad weather. But who knows? But as soon as I saw it, I says, oh, isn't that pretty cool? You know, you talk about great information, meaning the information that he could have decided, okay, now we're gonna move the wheat, or we will go along the wheat. Or vice versa, we're not going to move the wheat, and we'll go along the wheat. That's even a better one, really.
I wonder if he's insuring that wheat through General Re. I mean, the guy has his finger in every hole.
Well, they didn't give him long. I mean, June 27th, evidently.
This is really short.
But this has been going on. This report here, this says this has been going on. They already called him into a public hearing April 10th, and it's been going on since then. It said, as of April, here, I might as well read the rest of it here so you can get the gist of it. Okay.
That's cool.
Okay, let's see. The board remains very concerned about the limited time. I already have that. An unseasonably harsh winter hindered trade networks in the U.S. and Canada, forcing railroads to run shorter trains and added congestion to the system, already coping with an increase of with an increase in crude oil shipments from the Balkan region and record grain harvest. BNSF, based in Fort Worth, Texas, and Canadian Pacific, were called to a public hearing on April 10th, along with farmers and representatives of the agricultural producers, who outlined the negative effects from the backlog, including elevators running out of storage capacity, penalties incurred for products not delivered on time, and the risk of stored grain spoiling. Since the hearing, both companies have provided data to the STB, which is the regulator. BNSF has outlined plans to add employees and locomotives to make additional capital investments, with a significant portion allocated to the northern corridor, which carries a significant amount of grain traffic. Public submissions by the Calgary-based Canadian Pacific have not to date clearly articulated its plans for resolving it. Let's see.
Very interesting.
We are disappointed that we have not met our customers' expectations, but we have made significant progress toward substantially satisfying outstanding orders, and we've prepared for this fall's harvest. It's intriguing, isn't it, man?
It's very intriguing.
It is.
And, you know, at the same time, very interesting that wheat is rotting. Wheat is plummeting.
Okay.
The price is plummeting.
Right.
It is so oversold. Let me give you a sense. You know, we closed today on wheat. Let me take a look.
580.
All right, 580. Wheat has not traded below $5.65 per bushel since September 2010.
Wow.
It's very oversold here. But the hard red winter wheat spread is still very, very wide. Bread manufacturers are using that.
Okay.
I bought some calls. You know, in the service, I bought some calls on the wheat ETF because I think there could be an explosion in the wheat price. Look, corn and wheat have gotten trounced. Soybeans, not so much. So I'm looking for soybeans actually to come lower and corn and wheat to rebound. Wheat much more than corn because there's lots of corn around.
Yeah.
But, you know, it's a risk trade. The reason I bought calls rather than futures, I want an automatic stop. I don't want to get stopped out. In other words, if it dips down past the 565 and then explodes, I want to stay in there. So calls are the right way to play this.
Sure.
But very interesting. How about if it came out that Mr. B was in there buying wheat?
Oh, I know. No, I'm with you. Exactly, man. No, listen, there's no doubt, man. There's no doubt. You know that they know what they can move, and then,
Well, I tell you one thing. We'll talk about this in the next couple of sessions if the wheat price explodes.
Well,
then we'll have something to talk about.
It was really cool here, folks, and depending on how long you listen to Andy's show, Andy has the experience in the physical market. And see, that's what we're talking here, that you actually have the physical market and you have someone that can get their hands on that physical market and know, okay, hey, guess what? The wheat's not getting picked up today, pal. Okay?
Right. And if we leave it there a couple of weeks, it's going to rot and disappear.
Exactly.
Right?
Exactly.
Right? This is not copper. This is not gold. This stuff deteriorates.
No doubt.
Yeah. Very interesting. Very interesting. Hey, what about us? Oh, I was just going to say, moo and oink.
Oh, man.
Seriously. Oh, man.
97. Let me see something.
Oh, man.
29.
Those
39.
August...
Those August hogs. $1.50 these hogs.
Those August hogs went from 112.15 on April 9th to 131.20.
I know.
But it's all about the cows, man, and it's all about consumer choices in my mind. In my mind, people are going to the supermarket. They're looking at look at the cows, man. They're $1.50 a pound on the cattle today.
Oh my God!
Right, the feeder cattle, $2.10. Today's highs are tomorrow's lows. That's how it's been feeling here, and this is consumer choice, because when you go in there and you see those steaks so expensive, and maybe you go for the pork chops, the ribs, whatever. If you're a truly dedicated carnivore.
Well, you know what's wild here, folks. If you're going to eat a steak, you might as well go out and eat it out right now, because the restaurants haven't caught up with the price yet.
Yeah, I tell you also, Tom, the cost of goods sold, man, for some of these food manufacturers, the Hormels, the Burger Kings, the McDonald's, they are going to go through the roof.
Burger Kings and McDonald's only sell plastic, man.
Yeah, well, there is a little beef in there. They wave a cow over it.
I guess so.
But the point is, there's real ramifications from what's going on here in these beef markets. Hey, the USDA said last week that we're going to become an importer of beef in 2015. That's crazy. We're the world's biggest producer.
Okay, so I think it's time let's see. I was tempted to get a ranch in Argentina before. I'm glad I didn't, because you just keep losing money in Argentina, but...
Yeah, the government's problematic. Maybe a ranch in northern Australia.
Oh, northern Australia, huh?
Because that's the beef port to China, and they're eating more and more beef.
Oh, that's the number then. Okay.
Hey, speaking of China, Tom, what's your take on this? China has a lot of investments in southern Iraq in the oil fields.
Okay.
They've been building inventories in China lately.
Yeah.
Inventories are at record levels because they see something coming, and they're smart. Do you think that the Chinese will militarily defend their economic interests in southern Iraq if ISIS turns and goes south?
No.
Okay.
No.
It's another reason to be long Brent crude.
Yeah, they're too smart for that. Meaning that our problem always has been, once that whole area got broken up, is that they keep trying to defend something that is non-defensible.
This is true. It is non-defensible. And they just get themselves mired. They're smart. They're unlike us and the Russians. They don't get themselves mired in these 5-10-year conflicts in places like Afghanistan and Iraq.
No, they go in, they grab assets at cheap money, store them up, wait for the next deal. Right.
And if they lose those assets because of political insurrection, so be it. It's a loss. It's an economic loss. It's not a. They won't pour bad money after good.
Yeah, and it's just a different MO. Do you know what I mean?
Right. No, I understand that.
They're going to take over Africa. And in Africa, I think they're.
Yeah. Hey, speaking of Africa, there's a lot of problems in Nigeria these days.
Oh, there is. It's huge, man.
And that's also very bullish for the crude oil price here.
Yeah, it's
so Brent crude.
We're lucky. No.
Yeah, Brent crude at an $8 premium. Back in the Arab Spring, when everything started in Egypt and in those countries, man, that thing went to $25 premium over WTI. Seeing it at 15 is not going to be such a huge move this time.
No, I agree. Listen, folks, come over to our website at TFNN. You're going to newsletters, trading newsletters. You're going to see the Technometer commodity report. You can test drive Andy's newsletter right here, right now. Andy Heck, You have a great one. Safe
You
one.
too. Sorry about the timing today. I'll be there on
go back
time.
and finish your pasta, man. It's a beautiful thing.
Take care, buddy.
Okay, bye-bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV. But if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We had Boeing off of $1.70. ExxonMobil was down $1.65. Oxy got smoked. That was down $3.74. 3M was off $1. Let me see something for a second. It almost looks like every Dow stock was actually down. No, it wasn't. Intel was up. United Health, Coca-Cola, and Walmart. Exxon was the biggest mover downtown in the Dow Industrials. J.P. Morgan was next. Boeing was next. Boeing was down $1.70. That is out there. That's going to be an ABC structure on the way down. You're at 129. We're going to be making our way down to 118 with that baby. Let's go take a look at WPRT. This is Westport Innovation. This company produces natural gas engines and fuel systems. The low is $12. The high is $35. Okay, so she had the nice sign of strength that came off the bottom on May 1st. That's after a vicious downtrend for quite a while. $50 down to 17. You're coming into, but that sign of strength is there. So let me put this back on a weekly. So what you have on a weekly is that, yeah, she wants to make her way up to $19.29. That's your next swing point. She needs a little bit more juice right now, but she wants to get there. If she gets another sign of strength, she gets another sign of strength, then she will have a shot to get up to this $27 area. Walmart, well, actually, let's go over and take a look at that Big Blue. Big Blue out here, IBM has been having a hard time holding price in a long time. What we have now is that you had a rejection of just normal price out here today. She's at 180.88, and she's going to be running to 172. Let's go to Steve in Nashville. Hey, Steve, what's going on?
Hey, Tom, how are you today?
Doing great. You having a good day out there?
Yeah, not bad at all.
Cool, man.
Hey, I was looking at Yamana, AUY, on a 10-year quarterly, just for the heck of it, and then I zoomed into a 6-month weekly. I don't know if you can pull up either, but I was looking at the... Oh,
pretty interesting. I got it. I got the 10-year quarterly right in front of me. I got it. Cool.
Yeah, I was looking at the stochastics, and it looks like it's bottomed out.
Yeah, I'd agree.
Weekly.
I'd agree.
Yeah, I was wondering if you thought this thing was going to do anything at all.
No, okay, so when we look at the 10-year quarterly, folks, if you're watching Tiger TV, what you're going to see is this. It came into the low, into the swing bar of 08. That was 1.3 million. No, that'd be 130 million. No, yeah, 130 million. 130 million on the monthly. And you come into that with 40... It's hard to figure out. 40, it's not 10 times... Yeah, 46 million, okay? Rejected.
Yeah, mine shows billions on the big chart. But
yeah, I know that, but... Oh, yeah, no, it's a quarterly. Okay, it's a quarterly. It could be billions, but... Yeah, it would be billions. Okay, so it was 1.3 billion. That's why I was trying to convert it to 461 million, okay? Yep. So then if we put this on a weekly, we bring it back to a weekly. On a weekly, I'd let it come back into this 740 and make sure it comes back with lighter volume, because nice expansion, up, and it's acting correctly on the way back. You had a kind of expansion of volume here today, but I do expect it'll hit the 759 area.
Yeah, on the weekly, I see it looks like last week of May, it had a hammer.
Yeah, it's too small, though. You know, that is a hammer, but you got to remember something. A hammer, folks, okay, is that, you know, it's a bullish sign inside candlestick charting, but the bigger the hammer, the more bullish it is. It's a tiny hammer, you know. So
I see. Yeah, the next 3 weeks, so it looked like it was increasing volume up to like 50.
No, it was, but it still didn't get back inside its range. See, the other ones, I would push you into getting other gold stocks. There's other gold stocks that are a lot stronger than this. I don't mind the setup. I don't own it yet, but I'm watching to see how, if it pulls back into that 740 with light volume and the other equities, gold and silver equities are still acting correctly, yeah, I'd bite on it.
Great. Thank you, sir.
Okay, man. Have a great one. Have a safe one. XAU, HUI, folks, bottom line, you're going to see those babies there just about, the XAU's at 97. That's going to be running to the 107. HUI, they all want to run up to these swing points. And, you know, the way this run has been established, I don't expect you're going to break the swing in the first time up. What you'll do, you get up there, you back off, build another ABC structure on the way up. The real key is going to be, what is this run all about? Is this run all about political? Is this run all about inflation? You know, because when Andy and I were just talking, you can see the food inflation's ripping big time. Oil is out there. Is that going to get into wage inflation? And you know, we'll find out. What is definitely out here in spades is that free money is still out here. The real question is, does free money move through the economy? That's what it really comes down to. So the follow through tonight, all these oil stocks really got smoked, man. We go take a Oxy had volume off the highs. Let me go look at Halliburton here for a second. HAL. Halliburton, it was down 221. She had volume off the highs. They were dumping oil stocks everywhere. And I suspect, you know, this totally makes sense too, because folks that are heavily involved inside these oil companies will pay attention to the Middle East on a big basis. It's like when I was watching Dubai last night, it was like, you got to be kidding me, man. You know, and it's not that Dubai is huge a market. It's I think it's 125 billion capital. That's not a huge market. What it is, folks, is that it is a benchmark for money in the Middle East, going into the Middle East. I mean, you know, and coming out. And you start seeing fast money coming out very quickly. That means that large corporate players are getting worried, and they just move their money very quickly. We'll see what ends up shaking out here tonight. But with these oil companies coming off highs with huge volume, it's saying that, you know, as Andy had said, they probably do have large amounts of money that, you know, are over in Iraq. And what you do have in northern Iraq, okay, Iraq's going to be 3 countries. That's my take on it. And northern Iraq, you know, ISIS is going to have it. They're going to have it. What you also had out here is that, you know, there was an attack 20 miles away from Baghdad last night. 20 miles. That's nothing. You stay right there, folks. We'll be coming right back. The Dow Industrials finished down 119. NASDAQ off 18. S&P's off 10.5. Gold is at 1,318. Silver at 2091. If you'd like to test my daily newsletter, the way you do it, come over to our website at TFNN. Go to newsletters, trading newsletters, market insights. Can test drive it 2 weeks, absolutely free. Coming right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Rich in Taunton, Mass. Hey, Rich, what's going on?
I just want to let you know that I listen to a bunch of radio shows and financial related, and TFNN has the best stuff, most interesting, even if you don't understand everything about it. It's really good stuff.
Thank you so much, man. I appreciate that. I love the part about not understanding it. No, I know it's a different language. I mean, well, the way I speak is a different language anyway.
Yeah.
Oh, listen, man, I appreciate you listening out there. All you folks, thank you so much, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our Believe cards. This is by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We had the Dow Industrials closed down 119, NASDAQ off 18, S&P's off 10.5. All those indices, folks, including the Russell 2000, got to higher highs, gave it up on price, gave it up on volume. We start with the S&P. We take a look at the SPY. This is what you have. SPY got to a price point out here of 1968.17. Had volume, well, that was the cash S&P. We had volume out here of 632 million. That got over the high of Friday, of course, where we had 1.7 billion. That was option expiration. We are at 1949. We'll see what kind of follow through we get as it tries to get into this 1925 area. Dow Industrial, same setup in the Dow. Dow got over its last two highs, had lighter volume, closed underneath it. Actually, maybe it didn't get over. No, it didn't. It got over 970. Oh, this is okay. The first high in June 9th was 970.17. Went to 969.70. Didn't get over the second one, which was 978, which was last Thursday. Bottom line, gave it up. Tried to get into it, gave it up. Lighter volume. 16,703 is where this baby is going to try to get into. NASDAQ Composite, that also gave it up. Composite gave it up pretty intensely, actually. The Composite had a spike high. The spike high got to 4399. That was over the high from March 7th. You know, if you got to remember, March 7th, we came off that high with, well, actually, let me bring this back because this is the third time we have done this. Yeah, this is the first one. So check this out. The first one was 42.46. That was January. We have a high volume low on that February 5th low, which is 39.68. Then you got to a higher high. We got to the 43.71, which had spiked today and gave it up. Now, with that comp busted up, guess what? You're going to try to bust it down. The bust down in the type of consolidation this is a very large one now because why? Because we went to a higher high. You're talking about 500 points. Let's see, 350. No, 300. Yeah, 350 points. Yeah, 350. No, 400 points. 400 points. So we'll see how we get down to those levels. We take a look at the three Qs. NDX 100. NDX 100 also had that spike high, got up to the 93.57 area. And inside the NDX 100, this is what you had that was moving it today. And this is pretty intense because Vertex stayed up, folks. Vertex Pharmaceutical was up $26. That was putting juice into the NDX 100, even though bottom line it gave it up. Broadcom was taking it out. That was down 121. You had Monster Beverage off $2. We had, let's see, NXP Semiconductor, that was down 162, and a Vipul Communication. Inside the Dow Industrials, the big mover out there was ExxonMobil. You had the oil and gas service sector, folks, take it and take it deep. If we go over and take a look at ExxonMobil, XOM, what you'll see, Exxon came off the high with 9.6 million shares. She is down $1.65. She got back inside this range, not the lower range yet. This one would set it up saying it's just going to $99. But once you get to inside the 101 area, that would be the lower range that could bring it all the way down to the 89 area. Some of those other oil stocks that you had Halliburton down 261. You had Apache off 271, 371 actually. Chevron was down 131. Oxy, this is Occidental, folks, an amazing personality stock. When that gives it up, man, it just gives it up. Down 374, had 5.5 million shares traded. You know, Oxy is at 101.45. It looks like it's going to make a run down to this 95 area. Gold. What do we have with gold? Okay, so if we look at the XAU, DHUI, well, fair. Yeah, let's start with the gold contract. Gold contract, not a huge amount of movement out here today. We went from 314 to 326. You closed out at 319. This is after the large price move last Thursday, wide price spread, accelerated volume. Got into the swing point. We're at 1319. This is going to start building cause to get up to the 1392 area. Silver, same setup. Silver wants to go into silver. It's this February swing high. Gold's the March swing high. Silver gets to 2117 today. That's making its way up to this 2222 area. Bonds, bonds just going topside. The 10-year yield right now is at 2.58, and I do expect you're going to see, much higher bond prices, lower yields. That's the way this whole thing is shaken out. You had the Federal Reserve Bank of New York's president, William Dudley, come out today, and this is, it's amazing, these Fed presidents, how they basically talk on a continual basis about what they think is going to happen with interest rates after the fact that, they come out with a normal statement. In this particular case, the Federal Reserve, the Reserve President of New York Federal Reserve, and that, by the way, is the strongest or the most powerful Federal Reserve. They're always a voting member. William Dudley, he came out and he said, market expectations are that the Federal Reserve will start to raise short-term rates around the middle of 2014, said Dudley, who also serves as vice chairman of the Federal Open Market Committee. That sounds to me like a reasonable forecast, but forecasts often go astray, so I wouldn't put too much weight on that particular set of forecasts, he said in a speech in San Juan, Puerto Rico today. Bottom line, folks, it looks that the Fed, let's put this, June, we're going to be in 2015 in 6 months, and we'll see if, in fact, rates are going to go higher in 2015. As we look around the world, someone else is going to have to basically start raising rates, I suspect, before we do. The reason being is that each and every time that we actually look at the 10 years going across the world, most of the world has a 10-year that is giving a yield that is much smaller than ours. So it's always a competitive atmosphere. And you've heard that, many times about a race to the bottom. Now, guess what? I think we're at bottoms, but not at the bottom. Why? Because at 2.5, you can go down 2.5. That's what it comes down to. And the way that the 10-year is set up right now, watch this. If I put the 10-year up, actually, I'll put the 30-year up, US 1, because I can do the continuous contract on the 30 easier for some reason. Let me get this up. US 1. So when you do a continuous contract, I'm going to bring this on a much larger basis because if you're watching Tiger TV, you're going to be able to see what the type of correction that we have, number one, where it's been in the last 25 years, and guess what? This has not been a large correction in the context of years. We never even got back to the beginning of the actual breakout area. We were 27 ticks away from it. The beginning of the breakout area was in August of 2011. It was 127.09. We got down to 127.27, I think, 127.23. So two different things that end up happening. Number one, I suspect we're going back to 153.11. 142 is the big crucial point as we climb up to those levels. That's on the smaller part, so it's a test of the highs. On the larger part, folks, this very well could be another ABC structure on the way up. That's what it comes down to. It never did. I'll tell you exactly what kind of retracement it did when you really set this up. We set this up. This was just over 50% retracement from its last move higher. it's on a long-term basis, okay? But that's what it is. That means you can still do an ABC structure on the way up. It's Tom O'Brien, this is TFNN. You stay right there, folks. We're coming right back. The Dow down 119, Nasdaq up 18, S&P's off 11. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go overseas. We'll go to the UK first. We take a look at the FTSE 100. FTSE out here today, flat market, down 13 bucks. We're at 67.87. Let's take a look and put this baby up. Okay. So she is going to make a run. Now, she hadn't been able to take out her highs. It's going all the way back 6 months, too, by the way, at the 68, 67 area. Each and every time it was going up to the highs, give it up on volume, meaning light volume. And what you have here, which is really cool, and this always takes a long time to develop, but you have some really sweet channels that are lined up, meaning at the top of this consolidation and the bottom of the consolidation. In this particular case, couldn't bust out these 68.94 highs. Now what she's going to do, she's going to try to get into the 65.83. And right now, you're at 67.87. The DAX, we take a look at the DAX in Germany. What you have with Germany is this. Now, Germany's going to be really cool to watch because in the context of the NASDAQ 100, folks. And this is what it is. The DAX broke topside on the 26th of May. That had also consolidated for a full 5 months, where the FTSE couldn't break over it, the DAX did. That number that we're talking about over the break is 98.10. DAX today was up 17 bucks. We're at 99.38. I suspect we're going to make a charge down to that area. If you get inside that area, that's not going to be another indication, guess what, that these markets are turning. DAX will be running back to 89 at that level. So it's pretty wild. There was a statistic out here this morning that was actually blowing my mind. I heard this from Art Cashin. It's something like, when you take a look at the yesterday and today, I believe. No, it wasn't today. Okay, that wasn't today. It was the last 2 days. That was the tightest market, meaning the least amount of movement in the market in something like over 20 years. You always want to pay attention to big numbers like that, folks, meaning that it's like, okay, why couldn't you move? If you're going higher, guess what? There should be more buyers. You should be able to push that price higher. That is not, it's just the opposite of that case. Tomorrow, when you're watching the market, where you could either we will get a confirmation or not that you are expanding lower with higher volume. I expect we're going to come lower. If I'll make the bull and the bear case. The bear case is that as you start moving lower, the volume expands once again. The bull case would be if we take a look at the SPY. This is one of the benchmarks you can use. The SPY, when we broke topside on the 5th of June, the low of that was 192.70. We did 92 million shares. Today we did 96. How we come into that level will tell you, are we going lower? The top of that level is 194.65. Right now we're at 194.70. The bottom of that level is 192.70. If you go over to the 3 Qs, if you trade the NDX 100, we take a look, we talk about that benchmark. That benchmark here is 91.29. We're at 92.70. 35 million shares. What's going to be really cool on the NASDAQ, now you're going to be able to glean more out of the NASDAQ, and this is why. You hit a high today with 31 million shares. Was testing a high, did it on lighter volume, it's a failure. As you go down, it's going to have to do more than 35 million shares. So you're going to need an expansion of 10% as we go south. We take a look at the IWM, the Russell 2000, the iShare, Russell 2000. This one's a classic, really. It was coming into, today we got to 118.91. You closed at 116.76. You were going into the downdraft that had been created on the 4th of April. Couldn't handle it. 41 million shares versus 86 million shares. And it came down pretty quick. All these indices, folks, once about noontime came and selling started coming into the marketplace, at the very beginning, the volume wasn't that intense. Just price was coming down. Then what you did see, in fact, I'll put up the SPY so you can see this as this started getting some juice into it. What you had, the first leg down at 1 o'clock this afternoon, first leg had like 2 million shares on the 2.8 million shares at 1310, 110. Then you bounced higher with, so you bounced down with 2.8 million, you bounced higher with 1.8. Then what ends up happening? Then you get to a lower low at 2.3. That was at 1430, 230. Then you start talking some volume, and then people start worrying. We start doing on every 10-minute bar 3.9, 4.7, 4.9, and then coming into the close, folks, you did 8.1 million shares. If we take a look, that was on the SPY. If we take a look at the 3 Qs, same type of setup. 3 Qs that, though, just went straight down, right? From, 3 o'clock. 3 o'clock, big expansion, 1.2 million, and it just kept expanding from that point on. The IWM also did the same deal. The first leg down, you had 1.2 million, did a counter trend bounce up with 700,000, and then came back down with 900,000, 1.9 million, and the last trades out here with 3.1 million. So they were moving out. They were moving out pretty quickly. We take a look at the XLF, which is the financials, of course. Financials out here still hanging at the highs. They were only down 15 cents. You did get into a higher high, couldn't handle it with price. JP Morgan, let's go over and take a look at JP Morgan. Same deal. No, meaning it couldn't handle it with price. Citigroup's in trouble. Citigroup, it's only down 25 cents, but what you have with Citigroup is this. You get a low that's sticking out with volume, meaning 45.18. We're at 47. That's on the shorter term basis. We put this back on a longer term basis. Oh, I can't even put it back 10 years because then you can't see what it looks like. On a longer term basis, it looks like we're going to go attack. It's not the end of the world. 39, and we're at 47. But 39 on Citigroup, that's a $3.90 stock. Let's go take a look at some of the higher volume stocks, even in a low volume market. We had out here, you had Microsoft was down 24 cents. Twitter was off $1.04. No big numbers, really. EMC was off 27 cents. You had GE down 10. If we go take a look at GE, yeah, GE's going to make its way back to, this is going to be interesting watching this shakeout. Let me put GE up on a monthly basis for a second. Yeah, GE, so check that. This is a classic, folks. GE's only got to ICE. ICE on GE is 25.75. When we came down October of 08, did 3.6 billion. We came up there with 700 million. We did 440 million last month. So watch this. Correlation, 440 million last month on GE, going against 924 million, going against 3.6 billion. GE better stop buying some companies. GE can go all the way back to $11.35. That's pretty intense. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. If you'd like to test drive my gold report, the way you can do it, folks, come over to our website at TFNN. You go to newsletters. You go to investment newsletters. You can test drive the gold report 30 days, absolutely free. Coming right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had 3M off $1. You had United Technologies off $1.45. Let's go over and we take a look at the UTX. So United Technologies has been in a long consolidation, approximately 6 months, folks. We are at 115.68 right now. Man, all of these, you know, it's going to be interesting to see, can we get an expansion of volume off these highs? I suspect we're going to. I'm talking about right now. Why? Because United Technologies, so check it out. We're at 115.68. When it took over its swing highs at 91, it took them over with 70 million versus 91. makes a high with 68. Has been up at the high for 6 months. When you stay at a high for a long period of time, folks, with dramatically lighter volume, that's pure distribution. How you come off that high is crucial to understand, how far and fast you can go down. Right now, what is absolutely sticking out like a sore thumb is that February 5th benchmark at 107, and you're at 115. We go look at 3M. February 5th, by the way, folks, if you're looking at any charts, that's the benchmark in just about everything right now. What we had done there at the beginning of the year in January, we come off the highs. Well, we started up slightly. We come off those, and we come down with vicious volume. We go all the way back up with light volume. That's hanging out there. The lows in April are hanging out there also with volume. We take a look at 3M. 3M today, 3M was down $1. Not a big deal there. We put this back for a couple years. What you're going to see, though, is that once you get inside, this is going to be a close one, too. Once you get inside 138, if, in fact, we do, then that's going to be a problem. Now, the way 3M is set up, though, this is different. The way 3M is set up, this looks strong. See, this is 3M could have a natural retracement just to 130 and not be a big deal, because we had broken topside in December, went to 126, got up to 140, and then come all the way back to 123. So you're down $18. That was fast. So how we come back down into the 130 is actually going to be hard to break it because we've been down there twice. It's had large volume down there. You would have to build up a big head of steam, which you can, but that head of steam would have to be pretty intense to get into that 130 area. We go over and we take a look at Caterpillar. Caterpillar's been moving around quite a bit. Caterpillar down 97 cents today. And what Caterpillar does have, and this is where it's dangerous for Caterpillar, Caterpillar also has a high volume low that is basically sticking out pretty good. There's a few of them, actually. Caterpillar, we're at 107, and 94 looks to be game. Boeing, we take a look at Boeing. Boeing today was off $1.70. We're at 129.15. Boeing is like a small ABC structure on the way down. What you have with Boeing, her high 6 months ago was 144. She's at 129. That February 5th price point is hanging out there, wants to be tested. The top of that is 121. The low of that is 118. That is on your daily basis. We take this and we put this on a monthly basis, and what we have inside Boeing is that if you... 109. We'll see how this comes off the high. Right now, you're coming off the high, and you're not coming off the high with a lot of volume, meaning that could just be a normal correction that does want to go into lower price. Procter & Gamble, we take a look at PG. What we have with Procter & Gamble, she was off 51 cents today, and she is making her way back down to the lows. Last high out here was 81. We're at 79. She has a high volume low also. This high volume low actually is not the 5th of February. Look at this. She actually put a low in January. Yeah. She put a low in the 25th. Now check this out. I haven't looked at this equity for a while. This equity has been going sideways just about all year. Actually longer than a year. Yeah, it has. This has been going sideways since January, it's January of 2013. So this has been going sideways for a year and a half. This is really, you don't want to see that happen. Sideways with light volume. What does that set up? That sets up distribution at highs. And the longer that you go sideways at highs, folks, with light volume, the larger that a correction would come in. McDonald's, Big Mac. We take a look at Big Mac out here. What we have with Big Mac, she was down 44 cents. She's trading out at 101. And you have 99 is game. Some of the NASDAQ stocks, let's go to Amazon first. Amazon's at 324. Now, Amazon just hasn't recovered, by the way, which is going to be intriguing watching the next leg down in the marketplace. The high in Amazon is 408. We're at 329. Has that high volume low. Amazon looks to me like an ABC structure on the way down. Your A point would be 383. That's the March 14th high, the week of March 14th, 383. Oh, it's 100 points. Interesting. B is 284. So Amazon 240 would be the number. Let me pull this back. Put this on a weekly, put this on a monthly for a second. Yeah, it's going to be easy to get. It's interesting. It's always interesting when you do a price projection and then you see what's there. And what you have with 240, folks, is that Amazon had traded around that 240 number for 4 months in 2011. So pull this back a little bit further. And you got to remember something with Amazon. Amazon was the first equity off the lows in 2008. And, you know, it come off the lows, and it actually come off the lows in 2007. Made the first expansion. We very well may be talking about this in another 6 months, that this was also the first big equity off its highs. Because the high in Amazon right now is established January of this year at that 400 price point. Google, let's go take a look at Google, some of the high flyers, of course. G-O-O-G-L. What we have with Google. Google, okay, so Google got to a price point today of 585, 582, closed at 572, went into its downdraft from April 4th, had 2.8 million versus 5.6 million. Failure. That says that Google is going to make its way back to 525. Now, Intel. Intel came out with their numbers, good numbers, selling a lot of chips, gap away. We are at 30.50. That gap's going to be filled on Intel. Don't go short Intel, by the way, okay? That's a sign of strength in an extraordinary way. But bottom line, when you have a gap that's open, which we do on Intel, from 27.27 all the way up to 30, that's a 10% gap that's open, that baby's going to get filled up. Microsoft, MSFT, what we have with Microsoft, she's still in a consolidation. Microsoft is trading out here. She's trading at the 41.74 level. What you want to watch with Microsoft is this. Microsoft, when it broke out, it did break out with lighter volume. She breaks inside 37.50 again, then that's gonna basically put in play that it could actually get down to 27, which would be a big number on Microsoft. Let me pull this back a little bit further. Yeah, Microsoft's definitely going to need a lot more juice. I mean a lot more juice, too, because on the monthly basis, Microsoft was doing $570 million going into $2.6 billion. Yeah, $2.6 billion. You know, it's made a heck of a run, though, because when you actually look at Microsoft, what you have is this, is that the run in 1999, it's at 1999 levels right now. So it had stayed up there for about a year. It's come into that supply line, and we know that that is one monster supply line. But I suspect you're going to get a pullback coming off of that. And Microsoft right now is paying a 2.68 dividend. Not a bad dividend. You know, we'll see where that baby does shake out. NFLX, Netflix. Netflix, of course, has been a high flyer. Netflix is at 436, and she, let's see this. This is pretty amazing. Ooh, baby. This is a trip, this one. Okay, so let me see what the short position is on Netflix. Short position on Netflix, oh, it's not as bad as it used to be. It's 5.3 million, which is 9.3%. That's still a lot. It's still a lot, you know, to basically go short on. But Netflix looks to me like she wants to get down to the 380 area, and we're at 436. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. We now finish down 119. NASDAQ off 18. S&P's off 12.5. We're going to be right back.
Andy Tech's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. If you'd like to test my daily newsletter, folks, Market Insights, the way you can do it, come over to our website at TFNN. You go into newsletters, trading newsletters, Market Insights. You can test drive it 2 weeks absolutely free. Okay, so let's walk over exactly what we had happen out here today. If we take a look at the SPY first, what you'll see, you got into a nice high. You got up to 196.50. The high that was generated last Thursday was 196.60. We did 96 million shares. That was pushing into 105 million shares as well as 85 million shares. Gave it up on price, gave it up on volume. What you can expect out here tomorrow is that we're at 194.70. It'll try to get it to 192.70. Your benchmark is your 96 million shares today. You'd want to see an expansion of volume as you get into the lower price. If you don't get an expansion of volume as we get into 192.70, guess what? The high would be tested again. You get an expansion of volume as we get into that area, then it'll make a run for the top of the lower range. And the top of the lower range, folks, is 188. So that in itself is a good way down. That's your SPY. We go to take a look at the 3 Qs, the NDX 100. Inside the NDX 100, what we did out here today, you got to a spike high. A spike high, folks, means it takes it over the high intraday and takes it over the high good, and then as soon as that happens, it gives it up. And that's exactly what we had happen in the NDX 100 today. We got to 93.57. All the rest of the highs out here were 92, 96. So it was enough to really basically close out positions, all of the above. You did 31 million shares. We're at 92.70. Your benchmark is 91.29. Your volume characteristic is 35 million. So you did 31 today. You need an expansion in the NDX 100 of over 35. That's what you'd be looking for. If you don't get that, by the way, that's a test on lighter volume. You'd go test the highs once again. IWM, Russell 2000. Now, the Russell 2000 is the weakest indice. It had a huge counter-trend bounce, though, no doubt. You know, the Russell couldn't move off the lows as the Dow was making highs, as the NASDAQ started crawling its way back up. The high in the Russell 2000, we're dealing with the 120 level. We are up there from March 4th till March 24th. We made it back up. The Russell finally ended up with a sign of strength on June 5th. Had another small sign of strength on June 17th. Today, you got to 118.91. Now, the 118.91, folks, was coming into the downdraft off the high. The characteristic is classic in a market that wants to go down. We did 41 million shares coming into 86 million. It's not even close, okay? And we're not even talking about coming into the bottom. Actually, we did get into the bottom. That's even more intense because your other benchmark is 112 million. That 112 million was the first high that was established in the IWM. The low of that is 118.18. We got to 118.91. So you could actually make the case that you did 41 million shares versus 112 million shares. Now, on the way back down, what are we going to be looking for? Now, this is where it's going to be really cool inside the Russell 2000. And to get harmony in the marketplace, if we're going to continue lower, you're going to need volume, expansions, and all the indices and all the ETF structures. When I say ETF structures, I'm talking about the SPY, the Diamond, the Qs, the IWM. On the way down, we did 41 million shares. Now, we're going to need expansion in the small caps of something dramatic, and this is why. At 114.88, which is $2 away, we had volume of 67 million. Well, guess what? That's going to be over a 50% expansion of what we're trading out here today. And if you get that, and we get the expansion in the Qs and the Diamonds, then guess what? This baby will go for the bottoms of July. July? No. February, sorry. February 5th. That February 5th would be game. And February 5th to game in the IWM is trading at 107. What we will get out here is that summer trading, you have the aspect of Tuesday, Wednesday, and Thursday to have volume in the marketplace. Mondays and Fridays, most of the time, is very light volume. If we lay out this scenario, what you can get is this. You get down Tuesday, Wednesday, Thursday, Friday, you get a small bounce. No, you get down Wednesday and Thursday. Go down today, you go down tomorrow, and you go down the next day. Then you have a small bounce on Friday. If you get a small bounce on Friday and lighter volume, guess what? That is setting up an ABC structure on the way down. That's the bearish scenario. The bullish scenario would go like this. Tomorrow, you pull down, volume contracts. You pull down the next day, volume contracts, it rejects lower price. Then guess what? That would be say that you are going to go test those highs once again. The highs, structures that are in place right now do not have to be tested. Why? Because we had option expiration last Friday, and as I said yesterday, it didn't matter how volume come in the marketplace. You got to a high, didn't have price movement, but you had that high. When you have a high volume high or high volume low, they have to be tested. That's just how markets... It's crazy how they like to do it, but it's consistent over and over and over again. We got the test out here today. You got the failure out here today. And if you go over to the bond market and take a look at the bond market, what we have with bonds continue going higher. The 10-year out here today had just about 1 million contracts, I believe. Yeah, 1.1 million contracts. We're at 124. We're at 124.18. We only need 2 more ticks in the 10-year, folks, and then you're going to see some big movement. Why? Because we've been in this consolidation in the 10-year since the beginning of the month, from the 3rd of June. You get wide price spread. There's no reason the 10-year tomorrow couldn't be up a full point. The type of volume you get underneath that, you get wide price spread, accelerated volume in those bonds. It's going to be a huge heads up once again. The 30-year, same setup with the 30-year. 30-year did 320,000 contracts out here today again. Now, the 30-year has been stronger than the 10. The 30-year, the swing point in the 30-year is only 2 points higher right now. 2 points and 9 ticks. That's nothing. The 30-year looks like it's a very large ABC structure on the way up, 129. Is that a 10-point ABC? Yeah, it is. It's a 9-point ABC structure up, which would take you to 143. And that makes sense because the 142 area on the 30-year is ice, and that's a natural bounce on a market that had been down. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it. Like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking up right here tomorrow. Go get them, folks.